take a look at what's going on in markets at the moment. It is all about what the central banks are likely to do next, particularly given many central bankers are now pushing back against imminent rate cuts. So how's this all playing out? What can we expect? Luca Santos joining us from ACY Securities. Luca, good to see you again. Happy New Year.
Good morning, and Happy New Year, everyone.
All right, so as I was saying there, it is all about where central banks are going to move from here.
Definitely.
Markets having priced in, it's around 55% now bet that the Fed's going to move by March.
66%.
Oh, it's up to 66. Yeah, maybe 66. I was quoting yesterday's figures.
Yeah.
The numbers all over the shop. Yeah. Interesting also because look, we did have more Fed speak out overnight. Raphael Bostic, in fact, I was just going to retrieve his quote where it was broadly supportive. He's saying he's open to cutting interest rates sooner than he anticipated.
Correct.
But he wants to see further accumulation of downside surprises. So watching the data, I mean, that's key at the moment.
So the whole thing about the Fed is exactly what you mentioned. They need to watch the data first to take steps. Different from the other central banks. My view, my projection for the Fed is we are on the band of 5.25, 5.50% on the rates. The next meeting we're going to have in 31st or 30, can't remember very well, of January. I'm expecting a pause there, all right? As the market is expecting a pause as well. So not much happening until March. 66% priced in for a cut of 25 basis points for 28th of March. I'm expecting 425 basis points cut for the whole 2024. So the way I'm going to play this is the first March meeting we're going to have a cut, and then the next we don't, and then the next we will. So one yes, one no, one yes, one no until December 2024. And this will bring roughly to 4.25 to 450 the rates on US. But we have to remember what Jerome Powell has said and he stated last year in December. He made it very clear that if needed to hike, it's an option yet. So if everything goes out of what they're expecting and inflation continues to go higher, retail sales, we did have retail sales higher on December, pretty self-explanatory because of people buying gifts, end of year, people spending money on the retail sector, therefore it came higher than expected. But in overall, I do think they will cut 25 basis points in March and follow up by another 75 basis points until December 2024.
Yeah, and you look further at that data. In fact, overnight we had those new claims for unemployment benefits falling to their lowest level since late 2022. Should we take much notice of that? Once again, it's sort of seasonality at play.
The data on employment, it's a bit tricky on US, to be honest, because every time they present something and then the next month or the next 2 months, they go and do it again and say that they were wrong. So they do a reprojection. So I don't think the market is looking much to this data at the moment. It's much more looking for the speakers as well as the inflation. Speakers now have a big take on the US dollar. So the Fed speakers have a big take on the US dollar as well as the CPI coming as well.
Yeah, where are you seeing the US dollar track at the moment? Because it has recovered quite substantially, hasn't it?
It did. It went from, so there was the boundary on 102 to 103, and right now it's trading above 103,500. So I'm expecting this to continue higher and giving strength for the US dollar until the first quarter ends. And then after that, I'm going to play bearish on the US dollar. So for now, bullish, but then bearish.
Yeah, okay. All right. Well, that's what we're seeing out from the Fed. Now, of course, ECB, we've also had speakers perhaps pushing back again about the concept of rate hikes being imminent. However, we did get the minutes out from their December meeting overnight. Where they were showing confidence that inflation is falling back to target. So that's certainly a positive, but they're warning that those risks remain. And they're underlying that where the statement actually said there's no room for complacency.
I didn't have time yet to read it, but good to know that. But first of all, I think it will be very different from what I've just mentioned from the Fed. I think ECB it's playing like rather cut sooner than later. So I guess they will do a cut a little bit later than the Fed. I'm expecting more towards June 2024, the first cut from the ECB. Inflation, it is coming slowly down, and this is exactly what they want. They want a lower inflation representing the numbers through every month. Not, lower this month, up this other month. Lower, up. No, they want it steady, slowly going down, and they are getting it. So most probably they will start to cut as well this year in June or the second half of this year, July, let's say.
All right, now across the channel, the UK, the Bank of England also in focus. Interesting too, because we had those recent inflation numbers, which actually surprised on the upside.
Yep.
Mind you, a lot of that was driven by the tobacco tax that they put in place.
I do believe that so, and I do believe as well they had a more higher spending than they were planning to, and this aggregates to inflation. The economy is like, it's a machine, so everything has to work combined to have the result you want. If something goes on the other way you're not expecting, then everything's going to go on the other way. We did have high inflation, 0.2 higher than expected. It occasionated a very strong move on the pound. I think was 0.8% up against the US dollar, even though the US dollar was very strong. This only shows us that the UK bank, so the Bank of England, will have to maintain higher for longer. And therefore, we can play a game, we can play an interest rate game between the Fed and the BOE. Therefore, we can long GBP USD most probably this year, because the Fed will cut first. BOE, we have to maintain it higher for longer. Therefore, we need to see inflation coming down. I don't think they will come down sooner. More maybe first quarter we'll have a high inflation, and there we may have a lower inflation.
Luca, do you have a view on the RBA, what we're likely to see here? Because as we all know, it was late to the hiking cycle.
Yes.
Perhaps may well be travelling about 6 months behind some of its global peers at this point. We've had some more data out. Difficult to gauge exactly what's going on there, particularly the jobs market. There's a seasonality at play once again here, given we're at the beginning of the new year. Where do you think, do you have a rough idea as to when they could start cutting?
I don't think they will cut this year, to be honest.
Really?
Yeah, I don't think so. The next meeting is on 6th of February, and I think they will have to maintain higher for longer. We need to see lower inflation. We need to see stable real estate market that we're not seeing. Prices are going to the roof. And as soon as we have a slowly decrease on rent prices, food prices, groceries prices, then they may start to cut. But for me, in my opinion, I may be wrong, they won't cut this year.